Welcome back. In the last video, we talked a little bit about credit risk and how your credit risk is how companies determine if they're going to lend money to you. How big of a risk are you to them? So we're going to talk about that a little further. So let's talk about risk for a minute. Risk is your exposure to cause danger, loss, or harm. So if that's what risk is, then credit risk is the exposure to cause financial danger, financial loss, and financial harm. So ask yourself, are you a credit risk? Without understanding your credit report, without knowing all of that information, just be true with yourself. Are you a credit risk? Are you the person who pay your bills on time, or are you not? Are you the person who pay back what you say or do what you say you're going to do, right? All of that plays into your risk factor. So credit risk is also the probability of possible repayment from anyone who takes out a loan. Again, it's the probability. So it's a numbers game. So if I'm looking at your credit report and you have a low score and it's showing that you're high risk, it's telling me that you're probably going to pay in the beginning, but after a couple months, you'll probably start paying. So a lot of times when people have low credit scores, and when I say low, I mean 300, 400, and 500 credit scores, those are considered low and terrible, bad, all of the negative words. If you have those scores, you're telling them that you're not good at paying your bills. You're not good at repaying loans. And you will sign on a dotted line to get the loan, but you'll do everything that you can to avoid repayment. That's called a high credit risk. And what that means is creditors are going to have to do whatever they can to get as much money as they can in the beginning in order to do business with you. So what do? So they'll say, okay, I'll approve you, but you have to put $2,000 down. $5,000 down. You're going to get the new iPhone and you have bad credit. So they say, okay, you can get this iPhone, but we require a $700 upfront payment or $400 upfront payment. Why? Because the credit risk factors and the probability is saying that you're a person who's not going to repay. So what do we need to do? We have to get as much money as that we're comfortable with up front, because the numbers are telling us that you're going to stop paying soon. So that's why there's deposits. That's why there is down payments, and that's why there's high interest. Because if I approve a person who has a high credit risk and they don't like to repay, I have to stick them with a high interest rate, because that interest is very high and it's adding to the loan, so that the lender, the person that's giving you their money, they are receiving that money up front, a whole lot of money up front, because after 6 months you'll probably fall off, and then they may have to come and repossess some items that you purchased. So that's the reason for high deposits, down payments, high interest rate. Okay, your credit riskiness is determined by your credit score. I will repeat that. Your credit riskiness is determined by your credit score, and we all know at this point that low credit scores equals high credit risk. The lower your credit score, the more risk you carry, and you're always going to be high risk and get those high interest rates. High risk consumers demonstrate an increased likelihood of defaulting on their loan. So if I have a low interest rate, a high credit risk, you're bound to default, because your behavior and your financial resume is saying that that's what's going to happen. So you can reverse that by simply paying bills on time. When you pay your bills on time, you start to have a lower credit risk. Because of this factor of defaulting on a loan, this is why you have all of those high interest rates, down payments, and deposits. Once again, basically, they're trying to collect the most money up front because you're demonstrating the fact that you won't pay, you can't pay, you refuse to pay, and you'll do anything in life to not pay. So that's what you're conveying to creditors. So please understand your credit risk. If you currently have a bad credit risk, continue to watch the videos and they will explain to you exactly how you can change your risk factor. See you in the next video.